Hi guys. The show will start soon. I'm doing something in the background, getting ready for this show. This is Connect the Dots Part 101. I forgot to put that on here. Let me change the name. Connect the Dots Part 100. And I'll explain that 101. Thank you. So that's going to be fun. And then let me put it on the playlist as well. It's it's hard for me right now being sick, but we're going to talk about this. That's going to be so much fun for us. No music today, guys. Just straight connect the dots. I've been working today on this, and hopefully Dr. Michael Burry, hopefully he watches and he understands, because I know he's putting something together verbiage-wise, and I'd love to have him really look over the analysis of what it is. So it's going to be fun right now. Some of you guys are going to learn a lot right now. Pause and do. Oh no, you're good. Oh, I got the message from somebody that's cool. Michael Burry Stanley liked your note. Time to open Jimmy. Position, brother. Yeah, so okay. Michael Burry. Do I think he's going to open up a GameStop position? Yes. So he's not posting about GameStop tonight. That's fine. An individual choose a subscription plan, which comes out to $31 a month. That's not happening for me. I got you. I'm just watching. Trade anything, bring whatever, get store credit. Some questions asked. That's cool. That's cool marketing from GameStop. It's happening. I got to figure out what I'm going to go trade in and get value for. But I will be doing something. But anyway, let me get the show ready to go. I'm almost ready, guys. Apologize if I'm not ready. Just give me one more second. I'm almost ready, okay? And then I'll read the text, I'll read the chat, but we're not on a timeline. We're just on a lot to learn. And Ryan and Keith. What was it? What's his name? Roy and Kitty? I'm inviting everyone to the show. And was it Larry Chang? I haven't talked to Larry Chang in a while. I know I might have him blocked, bro. No, I'm joking. I don't know why it doesn't come up. I don't know. And I can't remember why, but it's fine. Okay, so let me do this. Let's get this show on the road, guys. Appreciate you. Let's do it. Are we ready? Cool. Let me close this out. Okay, so yeah, it's tough, huh? You know, Cosmic said he's coming back, and yeah, he had that one show. I knew you were on the credit screen Endgame. I was doing stuff in the background, so I'm never online on time. I got plenty of time. Cool. Such a chill Sunday. And it has to be because minimal football games, you know, the real football games were played on Thursday. 3 of them. And so no one's going to watch anything else but all right, let's have this conversation. First, welcome back. Welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice. I am under the weather, but I'm getting better. I'm trying. Still have not tried the honey and black pepper. Haven't tried that out yet. That somebody recommended for my cough, but I'll do my best to get through this video with you guys. First, let's give you the premise of what the history is of Connect the Dots. The book is written. Okay, there is a book. We will finish up the other half. I'm doing that tonight. It's actually my mission right after this show to work on the book tonight. I penciled in time. And I will tell you this, guys, that we're doing a second edition right now, and then we'll go from there. Some of you are getting the first edition of Connect the Dots, and if you don't understand what it's all about, I'm going to sum it up for you right now. So we start the show right now. So, Connect the Dots. In the 1960s, there was a company, an investment firm that was developing called KKR. And KKR came out of the 60s, 70s, and they decided that they would go ahead and leverage companies with cash. They said, okay, we're going to give you some cash. As we give you this money, we can restructure your company. And they were calling them bootstrap deals, and they were going in and they were restructuring. They were, when they could, and or just loaning money. Now, the weight of the bond and the weight of the covenants, that would tear apart companies over time. And then in turn, these distressed credit investors would go ahead and make money off of the transaction. I would call it like a loan shark. That's what I would call it. But in the 70s and in the 80s, some other investment firms, Oak Tree wasn't around yet, but the individuals that worked there were. And when you look at people that were at Drexel, same thing. But it all started out with Ivan Boesky. And I tell you, because Ivan got very creative, and Ivan Boesky started doing these arbitrage investments and buying positions, large positions, into companies right before they merge and acquisite. Well, because he had those that what they call fancy information, he had the insider calls, and they were buying it. They were buying it all. But the word around town was there was this junk bond king by the name of Mike Milken, and Mike Milken was at Drexel, and they were underwriting for companies, and they were offering them the world. More money than they could ever handle. And it's okay, because the money came with sticky fingers. And as they went and they wrote these checks, they gave them the bonds, high-yield bonds, as they call them, that pressure was collapsing companies, but it wasn't fast enough. They developed a culture, and this is an unspoken culture. That's what Connect the Dots is. It's a book, it's a series, it's an idea that they would not only do the high yield bond, they would actually accelerate the demise of the companies. And to do that, they would use other companies. They would use executives to go onto those board of directors of those same said companies that borrowed money, and they would put in the bylaws, hey, here's a corporate takeover. Here's a couple of guys we're going to put in, and these are the covenants of owning this money. You must have this much cash on hand. You must have 3 board of directors that we choose, and everybody's done it this way. The part that accelerated was Carl Icahn, and everyone else started coming in going, you know what, let's do hostile takeovers. Let's take over the whole board, and let's buy the company, and let's buy the leverage. And that's what started happening. So when you see a hostile takeover come into play, remember that's the 80s. That's what was done. And as you are, like I've always said, you start making bets on the game itself. The money you loan out and the people you plan on that board of directors to destroy the company, you can make a bet on that, and it's a for sure thing. Now, there's tax loopholes and there's private equity, but think about it in the grand scheme of things. If you knew every company that was going bankrupt based off the fact that they were borrowing money and they had people getting planted on the board of directors, well, then you know what's going to happen next. So that's been the playbook for 40 years. And what happened to me was I got really lucky. I got really lucky because a guy by the name of Laser Haas, who was a CEO of a company called eToys, came into this chat and talked to me and said, Marantz, they bankrupt Toys R Us because they denied my idea of selling toys online. and then he said they bribed him, and he did 2 SEC filings, and it was a Rolling Stone newspaper article in 2015, and it literally was that he had an idea. He was working with Toys R Us, and they turned it down. They took his idea and gave it to Amazon. I'll let you just think about that for a second. But Laser Haas had it. He had this idea, and Laser said, "It's okay. It's the judges, it's the lawyers, and it's the executives. Everyone's in on it." And I just took it in passing, and I was just like, no big deal. And then the next day, Thomas H. Lee, a billionaire, killed himself. I'm talking about the next day after that interview. He committed suicide in his office, and he was 80 something. He was 78 or 80, somewhere in that range. And he was a billionaire, and he killed himself. And I'm just like, a billionaire kills himself? I don't understand. But it picked up my ears. So I started reading, I started doing some homework, and it started becoming a fabric of my everyday. Bankruptcy. What's going on with Bed Bath & Beyond? I want to know. Why did I want to know about Bed Bath & Beyond, guys? Because Ryan Cohen walked over and he bought some shares. And Ryan Cohen bought enough to be an insider and or not a principal insider. He didn't buy 10%. He bought 9.9, 9.8%. And what they did was next, they went ahead and listened to the letter from Ryan Cohen that he gave to the board of directors, the direction they wanted to go. Additionally, they did share buybacks with their cash, and that then made him a principal insider, changing the way he could get out of the company and how you sell your position, and penalized him. So he did sell his shares after that, realizing that this company was set for bankruptcy. But I listened to Ryan's interview, and he said, I sold and they changed, and he didn't want to get into detail. It's very vague. And I said, oh, I get it. But think about the snakes of Wall Street and the media. What did they do? They went ahead and tried to pin a murder on Ryan Cohen. The motive for murder. The motive of a cover-up for Gustavo Arnell, who actually committed suicide and jumped off of a building. The CFO for Bed Bath & Beyond. All while this is happening. This is a movie, but it's real life. So when I started seeing all of that, I got really lucky one day when I asked a question of a lawyer who was cashing a check at Costco. He was cashing a rewards check for $4,000. To have a rewards check of $4,000 and you get back 2%, I ask you, how much money do you spend in a year on a credit card? And I asked him, what do you do for a living? How do you have such a big reward check? He goes, it's a hell of a year. I'm a lawyer. And I was like, wow. He goes, I'm a bankruptcy lawyer. That blew my mind. I said, you're a bankruptcy lawyer? What do you think about Bed Bath & Beyond? He said, oh, funny you should ask. We should ask my buddy. Then he names his buddy. And I was like, okay. He said, he's a board of directors at Apollo. He works on the board of directors of Athene. But, he's done other things. He's been on other boards. And I go, okay, what's that mean? He goes, well, it's really easy. Everyone gets paid a couple of $100,000 to sit on a board of directors and just vote along party lines. You just do whatever they tell you to do. You become a CRO. Now, this gentleman had no idea I have a YouTube channel. This guy had no idea that I actually follow private equity and bankruptcies or any of that nonsense. He was just bragging about how they make hundreds of thousands of dollars just to destroy these companies and serve them up on a platter. Now, he gave me 3 examples. And as he gave me those examples, I went and cross-referenced to make sure they were correct. I saw this gentleman 2 more times. Even where he called the executive, Mark Billingson. He called him on the phone in front of me. Mark was like, I'll have an interview with you. On the record, sure. You want to learn about the industry? We'll talk. Funny, when I called Mark, he didn't answer again. But I've seen some things. I've seen Mark go through a health scare via a court case where he was getting kicked out of court for it. For an investment. You guys can look it up if you want. I've already shown it on Connect the Dots. I say names now. I talk it out loud because I'm fearless. Because what are you going to do to me? What are you going to take from me? If you come at me, what does that mean? That means I was right. So when I talk to these guys and everyone tries to quiet me down on private equity, like when I talked to Martin Scarelli and he tried to tell me about these investments that were great and sound, and I said, "What are you talking about? It's private equity." He's all, what's your infatuation with private equity?" Next thing you know, he's saying the same thing on his podcast 2 months later. Look at Ian Carroll, no different. Look at Bill Pulte. Bill Pulte, I'm curious about Elliott Management. What sparks your interest, Morantz? Don't you want to come on stage with me and Vivek and Ian Carroll and just talk crap to it? Come on out. Let's do a show. I'm like, no. Because I know what this is. Let me tell you guys about this story that's about to blow your mind. As I'm being told about becoming a CRO and what that means to a company and why you should look for it, then you know your company's going to be done and it's going bankrupt and all this stuff. It's going to happen. It's a chief restructuring officer. I had never heard of it before. A lot of us hadn't. But once I found that out, I came back to the crowd and I said, "Look at this. This is crazy. This is about to really happen." But I did ask this lawyer, I asked him a question. I want to say his name was Richard. I can't remember right now. But we'll use Richard for now. But I said, "Richard, what does it take to be a CRO? Like, do you got to go to school? You got to have a degree?" He said, "No. So anyone can be a CRO." It's like what usually happens, we take a person who's done it before, they come into the company and they're the new guy. And they're just there to tell the bankruptcy judge, "I'm a new guy. You can't blame me for the problems with this company. I'm the new guy. I'm here to fix it." You better hope you know the industry. Or you fake it till you make it, right? Okay. So check this out. This is what plays with my mind about Connect the Dots. A lot of you guys know this. That the things I say in Connect the Dots, Ryan Cohen has said out loud in an interview. He said it. He said, "Oh, all they care about is their 2 and 20. These private equity firms, they're just destroying companies from within." He said everything I was telling you. Because he's been at Bed Bath & Beyond and he saw it get broken down. You saw what is happening right now with Kohl's, Big Lots, all the same board of directors, Floor & Decor, you name it, even the Pulte Home Group. Everywhere it's really happening. So as companies go bankrupt and or leverage themselves where they can't recover, you ask yourself why Michael Burry, Dr. Michael Burry, was talking about GameStop in detail. Why was he publishing letters to GameStop's board of directors? Because he was telling them, "Hey, listen, I think you guys are doing this all wrong. The stock is severely undervalued. You need to buy it all back. You need to take these board of directors, these legacy holders that didn't take advantage of this whole opportunity to be a better business, a more interactive business, on the cusp of technology, name it, keep up with online, keep up with the internet, all the things that Ryan Cohen does today. They had these opportunities and they squandered them." So he said, "Get rid of these dinosaurs." What did they do? They hired more dinosaurs. And or what did they do? They brought in new people, new blood. And I get to show you the track. I get to show you the dots that connect to private equity between those folks. But when you say this is a once-in-a-lifetime investment, guys, this is the one you've been waiting for, a once in a decade, once in this half of the century. That's because Ryan Cohen did a hostile takeover. Ryan took it, he saw it for what it was, and everything else is just collateral damage. Get ready. Get ready for it all. Now, for those of you that ever want to think about if this could be wrong, I will gladly show you every investment that has been pushed out in front of people, the media, social media, you. We can name them. We'll start with SNDL, CCIV, Lucid, AMC, BIGG, GTII, Bed Bath & Beyond, Tupperware, Wolf, Unity. I mean, how many more do you need? Big Lots? Tell me what you need. It's going to be there. All of the investments that they push out in front of you that go bankrupt or they're headed towards bankruptcy. Mullen Automotive. Oh, it's so bad. So bad. So, let's show you something. Dr. Michael Burry came out with a tweet a month ago. Anybody remember the tweet he did? He did a tweet in October. He said that NVIDIA was overvalued. Palantir, overvalued. Several companies he was taking a personal short in. After he shut down his fund, he took his own money and said, here's what I'm doing. Now, right now, he just wrote that he's writing up a letter for GameStop, that it'll come out this month, and it's going to be the direction GameStop should go with their cash. I would listen to Dr. Michael Burry. I would listen to what he has to say. I would listen because he has a proven track record of thinking outside the box. Not just about the growth of me and the returns I get, but the whole picture. That's what Dr. Michael Burry is. So, until you write that letter, Michael Burry, I'm going to tell you something that you were right and you were wrong. You were right and you were wrong. But you were mostly right. Check this out. It's going to be blurry because Michael Burry, when he posts, it was very small, so I made it large. But what he's saying here is that he's a 3% holder of GameStop at the time. This is in 2019. He owns a lot of shares, but he's telling you $4 a share is not it. To give you an equivalent value of $4 a share, that'd be $1 today. GameStop was $1 a share to the equivalent of what he says here. And they had $237 million earmarked for share buybacks. So you divide that number by 4, and that would tell you the value. But at the time, they could buy back around 20 million shares. There, with those dollars. Their float, guys, 50 million, 60 million. Like, could you imagine how many shares they could buy back with the cash? Now you have earnings per share that would go up, and it would be amazing. The price would go up, and you'd kill all the shorts. Given the market cap of GameStop at $290 million at the close of August 15th, completing his authorization will retire over 80% of GameStop's outstanding shares. You get what I'm telling you? Because the price is too low. The price is very low. And if you have $237 million, you do it. That's what he's telling you. Okay, in this post. Now, I have to move this way because this damn thing was so small when you posted it. You put on here, the numbers are striking and demand action. We estimate that GameStop now has an excess of $480 million cash, more than enough to complete the share repurchasing authorization program and still invest in the business and pay down the debt. Think about this. GameStop has more money today than their market cap. Right now, as I'm talking to you guys. With the warrants that are out and all the bond money they have more money than their market cap. That is very coincidental to what happened in 2019. What was the outcome of the stock 1 year later? Anybody want to guess? The stock ran a 200x. In this case, at the peak of it, I'm so sorry, I said 200x. I apologize. It was 120x, something to that effect. It ran all the way to the moon. And you want to know what can happen right now if we go up 120x from where we're at today? Guys, it's the same recipe for disaster for this market. They are not ready for the leverage that is GameStop. Except I would tell you it's compounded more now than it was then. Because there's some real players here. But the same characteristics are here. We have more cash than our market cap, and our stock price is diminished. because for whatever reason, our stock price is where it is today. It's below our cash value. At the time, 1993, whatever the hell the stock was the other day. So as you go ahead and read what he's writing here, he said the unfortunate reality is that Amazon and not GameStop bought Twitch in 2014. See, shareholders starting at all-time lows in GameStop stock see little evidence that GameStop has effectively leveraged its elite position in the gaming universe as a new paradigm came into clear view over the last 5 years. What would that be, guys? Digital platforms, partnerships. What did we buy as GameStop? We bought Mac. What was some Mac company? We bought I forget what it was called. Chili Mac? No, it wasn't called Chili Mac. But we bought AT&T. We bought Cricket. We bought some other dumb shit, and not what we were supposed to. So you see here, Amazon bought Twitch. Instead, in 2014, GameStop started buying wireless store assets. And in 2017, Amazon, not GameStop, bought GameSparks. While less than a year ago, GameStop reversed course and sold its wireless store assets. Shareholders are right to worry. Thank you. Thank you for that, Michael Burry. I agree. We expect GameStop's business will perk up a bit during 2020 and 2021 as the new console cycle with associated software updates introduces finally get underway. PlayStation 5. That's what he's talking about. Notably, as of July 31st, Bloomberg reports short interest in GameStop at it's 63% of the outstanding shares. 63%. Did you know that if you're short GameStop 63% and you bought back 80% of the shares, what do you think would happen? How? Well, I'll tell you what would happen. What happened to the stock? Think about. You guys ever think about this? What happened to GameStop stock? And they didn't buy back the shares. They didn't. People did. GameStop didn't buy back the shares. They didn't shrink their float. No. These guys had to go long with it to get out of their positions, and then they put up collateral, and they just sat there and melted their faces. Or did they? It's awesome. Just wait till it really happens, guys. Now, we submit that with these shares in all-time lows, and more than 60% of the shares are shorted, despite the cash levels much higher than the current market capitalization. Lack of faith in management's capital allocation is a default conclusion. All of this creates the opportunity to enter 2020 with a dramatically reduced share count, along with multifold greater impact per share for every single other achievement of management. Consider as just one example that this turnaround is successful, and if GameStop were able to shrink its shares outstanding to 30 million through the share repurchasing, the 157 million divided that was just eliminated would pay out around $5.25 per share. Okay, that's a huge number, $5.25. Now, I'm going to go to this, and I'm going to have to fix my screen, so give me a second. Only because I was so small, pause, with doing that view. He made it bigger on this one, so it's okay. I made it a whole lot bigger. I'm shrinking everything I can, guys. There it is. It's getting there. Yeah, I got it. Woo, man, that was a long run. Now, the next tweet that he put out was this tweet that he said, and this came from Keith Gill. GME letter to the board. That's right. Siam Asset Management wrote a letter to the board. It says, Dear Michael Burry and team, Dr. Michael Burry, of course. Thank you for writing an open letter to the board of GME. As a deep value investor, I share your views wholeheartedly, especially with regard to the board's inaction over the past few months in face of the absurd low price of the share, right? I'm a CFA chart holder member with roughly 10 years experience in independent investing and haven't seen anything like this before. So in the 10 years that Roaring Kitty, Keith Gill, has been investing, he has never seen a chart like this. He's never seen a company like this in the 10 years he's been going. Well, guys, it's 15 years later from when he's been investing for 15, 16 years, 17 years, and he's never seen anything like this. What does that tell you? You know, usually such price action characterizes companies that are on their way to bankruptcy. Indeed, TA has benefited me the most by steering me clear of such companies. Yet this past few months, I find myself averaging down into this equity and leaps of a company with one of the ugliest piece of shit charts I've ever seen. It's times like these where my value first mentality manifests more clearly. So, Dr. Michael Burry wrote those tweets telling the public, I bet you didn't know this, that he was in contact with Roy and Kitty. He was in contact with Ryan Cohen. This came from Ryan Cohen in 2021. Now, it says a forwarded message from 2021. This was written October 4th of 2019. Hope this message finds you well, Dr. Michael Burry. Dr. Burry, my name is Ryan Cohen, and I'm the founder and former CEO of Chewy.com. I'm also a large shareholder of GameStop, and I've enjoyed hearing your thoughts in recent interviews. I'd love to jump on a call and talk about the company with you. Best, Ryan. I'm guessing they talked. And you know what, guys? To go in there and say, we're going to do this board of director move, here is the move they did. Now, this I will read to you so you understand what happened. But Scion Asset Management Group wrote this letter to the board of directors and said Scion Asset Management Group owns now 3 million shares, which was 3.3% of the company. We believe that the board of directors should examine itself as the stock languishes near all-time lows and as the company eliminates the dividend and lays off employees. Per GameStop's form, 14A, whatever it may be, the board voted its non-executive members $280,000 in compensation for the year 2020. This is erogenous, and let's see what it says. Especially in the light of the massive capital destruction that shareholders have suffered, we suggest that the 280 get cut down to 140. They want to cut off half. Well, we all know Ryan took away all of it, but it's fine. We also worry about the whopping 6.5 million share incentive plan 2019, hoping that management uses it judiciously. Members of the board, as well as executives, should be encouraged to buy stock in the open market, but they will not do it if they continue to be gifted so much free stock. Scion calls for chairman of the board, Daniel D'Amato, to request the resignation of the 4 longtime board members that include Jerome Davis, Gerald, whatever the hell his last name is, Lawrence Silva, and Stephen Arkunin. So the board of directors need to go ahead and retire, right? GameStop does not need ghosts of the past protecting the legacy of poor capital allocation and then oversight at this point in time. These 4 directors oversaw the rubber-stamped and ill-fated transformation of GameStop from the leading global physical video game retailer into the global family of specialty retail brands by building online and digital platforms and expanding the company's efforts beyond the video game category to include a portfolio of AT&T Wireless, Apple technology retail brands like Spring Mobile and Simply Mac. GameStop, that's what GameStop filed for. The board appears to have fiddled with Rome burned back in 2014 and 2015. There were assets and strategies available to GameStop directly within its wheelhouse. Instead, Amazon and others with more insight took advantage and burglarized GameStop's wheelhouse. Okay, so why are we talking about that? And I'm going to also do this part here too. It says, I just spoke with the CEO and CFO, and apparently they did this in response to my request. Cool. They wanted to make sure I knew I was heard. Pretty crazy versus what it took to get any changes during Scion Capital days. And we're talking about them that they went ahead and got people to retire. Largely along the lines suggested in the August letter, like having a proxy fight with no fight in winning, 3 of the board members resigned that he requested, and they're bringing 3 people with relevant experience. They also shrunk the board, all things I wanted. The new people coming in, Reginald, William Simon, and James Schmack. Now, you know, by watching this show, that Reggie, I really don't care for. William Simon was KKR, and James Schmack is private equity through and through. We've proven this 100 times. So, what did they really do? Anybody know what they really did and why they did these things? One thing you have to know is this right here is telling you that GameStop had the opportunity to be the next Amazon and or compete. They could have been better. They could have been on that route. But remember what I told you about category killing? They kill a category and they ship it to Amazon. So the fact that Amazon was winning all these things over GameStop was just to promote the inevitable, the destruction of the company and the category, which was gaming physical retail. It was supposed to happen. They wanted it to happen. Now, Dr. Michael Burry, my man, listen up clearly, okay? They didn't do what you wanted. You think they did because you said, you know what, I got my way. That's why you need to be careful. You know when you got your way? When Ryan Cohen did a hostile takeover of this company. But I want to remind you that not everything is what it seems. Go look at the post. We can go look at this post right here from GameStop, and it says GameStop appoints new people. Now, when it gives you the details of these people on the ongoing business transformation, and this is in 2020, when it tells you who they put there, you have to look at them. You have to look at Kathy Rebeck. She's GameStop's lead independent director. She will succeed Diamanto as the board, as the chairman of the board, because he's retiring. Jerome Davis retiring, Tom Kelly's retiring, and 4 people are out of here. They're not going up for re-election. So we got rid of 6 people. Kathy's in charge now. Now that she's in charge, who did they bring on? They brought on Reggie. Now Reggie comes from video game world. He's a video game guy. If you go and look at his whole history of the corporations that he's worked for, he's a video game junkie. He's been awarded for it. He worked for Nintendo and the GameCube, all of that. When you go and look him up and you look up his history, he's been at the Gaming Awards ceremony, this whole thing. He won awards. Cool for him. I mean, I'm happy for him. This is him, by the way. And you will see that he opened up his own advisory firm into product and placement and boards of service. Look at his boards of service, okay? Now, Reggie, we love you, bro. Sure we do. Brent, it was called Brentwood Growth Partners. You want to know something about Reggie that I've learned about a lot about business over the years? Just because someone is in the video game industry does not mean that they're going to know how to sell video games. It's like a plumber trying to tell you that he knows how to run a plumbing company that has affiliates and everything. No. Ryan Cohen doesn't need to know how to play video games to sell video games. Okay, I want to make this very clear to people. You don't have to be in that industry. You just have to go ahead and know how to run a business. And running business is totally different than what you're being told. Now, why am I showing you Reggie real quick? And I'm closing out windows and stuff. Because I was reading up on Reggie. And I realized Reggie's not qualified. This dude right here is not qualified to run a retail company. Retail. He could run Nintendo all he wants. He can develop video games. He can do all those things. E3, events. He can run all that stuff. Doesn't mean you know how to run this company, this retail e-commerce company. I looked at his history. It was crazy Derby Cycle. I was reading about Derby Cycle. Who's on the board of directors of Panda Express. You guys know how I feel about Panda? Because private equity came in and took him out. And or restructured, as we call it. A lot of people are calling it restructuring. I just say took him out. But I don't play these games. You guys know that. But, hey, he was on the board of directors there. And apparently, it was good for him. But we'll leave that one alone. I'm going to get to... he was there. Don't care about that. I was just curious if you guys knew about Derby. Because the Dutch Excel Group launched a failed takeover attempt in 2011 from Derby. They tried to take over the Dutch Excel Group. It was weird. All these biking companies took over. But when you look at the biking companies that took over from Derby, which was a biking company, you'll see here Dick's Sporting Goods contributed significant financial loss because they... Remember how you can destroy companies. But you'll see right here, in 2022, Excel Group would be acquired by investment firm KKR. So, yeah, I know there's private equity connected to the things that he touches, and maybe he doesn't know that's what he's touching. But I'm not worried about the guy so much, Reggie. I was more worried about William Simon. Why William Simon, guys? Because when you look up his track record, he comes from KKR. He's been a senior advisor for KKR. He also did Macaroni Grill. He did Chili's. All of those restaurants, the Darden Group. He's been on the board of directors of everything that private equity touches. Golden Gate Capital. If you don't remember Golden Gate Capital, they've been a part of numerous deals. with Bain and Company's directors. Bain and Company, their directors went over and formed Capital, whatever, Golden Gate Capital, and then they went ahead and bought up things like Express and other companies that they went ahead and leveraged and got. PacSun, you name it, they've done it. So when there's private equity involved, like this guy, William Simon, I'm not happy with it. But James Schmack is the CEO of Signet Jewelers. This is a problem if you know the history of Connect the Dots, because this guy's been on the board of directors recently of Chewy. He's been on Academy Sports and Outdoors. I told you that was private equity when I saw it. And he did Bath and Body Works, which has an upside-down balance sheet as well. They're leveraged to the tits. Okay, cool. J.K. Schmack, private equity guy. Why don't you want to be a part of Signet Jewelers? They are the parent company of every jewelry company since the 1990s, now under one roof at Signet Jewelers, and that would be where Sue Gove came from Zales Jewelers, Apollo's first deal. So you have that happening with J.K. Schmack. He is private equity through and through, there to destroy companies, not really help them out. My opinion, of course. But I started paying attention to Kathy Peterson. Kathy Peterson, Rebecca, she became, this is where you know Connect the Dots is so real. Pay attention, Michael Burry. She became the chairman of the board. You can see it here. For 9 years and 1 month, she was at GameStop while they're doing everything wrong from 2012 to 2021 before Ryan Cohen comes in and takes her out and takes over. We got you. Ryan's there. But look where she's at. She's here, and mysteriously, at the same time, she got a new job at Beachbody. She just retired as a COO. But I had to go do some homework. I was like, Beachbody. Okay, so this is the company you left. You left GameStop, you went to Beachbody. You want to know how you know it's Connect the Dots and it's private equity and she's a plant? Let's go to Beachbody. And you know what I had to do? I had to read. It says right here, a three-way merger between Forest Road Acquisition Corp., MyX Fitness Holdings, and Beachbody was entered in February 2021, which valued the new business combination at $2.9 billion. It was known as the Beachbody Company. Who was hired as a COO 2 months later? Kathy. Why is that significant? Because if you see this right here, you realize this is a SPAC. This is a SPAC, Forest Road Acquisition Corp. They're coming in. They're coming in hard. Pause. No, okay. And when I started reading up on this deal says here, Beachbody Company, and there's a complete merger, Forest Road, whatever it may be, and it's going to tell you, they're going to start naming certain people. They're like, oh, this is a great deal. We're going to be able to do this. Remember, the guy who's been running this company for so long, they want out. Carl Diker. It always happens this way. You own a company. You've been doing it for so long. You'll get me out of here. So they're going to put people in front of you, and they're going to be like this. Look at this. Kevin Mayer, who previously served as the CEO of TikTok, Chief Strategy Officer of Disney, will join the company's board of directors. So, right? Names, shiny distractions. Because when I go look at when it was filed, this corporation, Forest Road Corporation Corp., whatever it may be, go ahead and look at the board of directors that are the actual company merging with the SPAC. So the SPAC merging with the parent company. When I go look at these things, I know who's the underwriter. Guggenheim Securities. I don't have a problem. Somebody has to underwrite, period, right? But let's go look at these board of directors. When you start reading the board of directors and they're naming people, okay? Aiden Shanny, the CFO. When they're naming people, you're going to look, you're going to like, okay, maybe they don't have too many private equity ties, and then you find it, and it's like a sore thumb. It just lights up. You're reading, you go, boom, 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 boom. Remember, all you guys need to be doing this. You go through, and then you go, Keith L. Horn. Gotcha, Keith. What are you doing, Keith? You were with Elliott Management. So he's a COO at Elliott. Got it. For 12 years. Got it. Since 2020, all the way through 2020. You go, Keith Horn. Got you. So I found where the private equity was, right? Got you. Martin Luther King III. Remember, they put celebrities into companies on the board of directors just to give them a distraction. Because who else do you have here? You have Shaquille O'Neal. He's in here. Shaquille O'Neal's been a part of numerous deals. If you don't know about Papa John's, you should. But as I keep reading and I'm finding out who are these people partnered up with and why, you see Sheila Stamps. Sheila Stamps, CTI Group. You start going, okay, is this private equity again? Are we back into the fold? You can keep reading Pitney Bowes. We've talked about them on Connect the Dots. But as I kept going down, right here, Harlan, Shanek, KKR, the whole time. Right, co-head of America's Special Situation Strategy at KKR. And so the next guy, Rick Hess has been with TPG Growth. I need that water again. Sorry. So this is showing you that the combination of the companies and the corporation that buys in, the money's actually private equity. So are the executives that replaced at GameStop, I'm so sorry, were they really problem solvers, fixers? No. Michael Burry, Dr. Michael Burry, you asked for a change on the board of directors. And they masked that with putting Kathy in charge, who then in turn was already hired by private equity to go run this company called Body Surf, Body Surf or whatever it's called, Body Shop, whatever. Beachbody. They gave you William Simon, who is a senior advisor at KKR. I wonder how he got there. He's been on the board of directors of Chico's, which went bankrupt, along with Zell executives, if you don't know that from Apollo. Darden Restaurants, which is KKR and private equity. RJR Nabisco, which was the largest private equity deal of the 80s. And this is who was on the board. And you guys were saying, oh, this is a good thing. No, this is not where it starts. This is where it's going to end for a lot of people. So if you're not paying attention, you might get caught on this. The luxuries we have at GameStop is that GameStop has a hostile takeover. And that hostile takeover is worth its weight in gold. And people need to know that we are trading below cash value, that we have done the right things in this transition. And if your advice, Dr. Michael Burry, is to use the cash to buy back the shares, I understand what you're saying. I do. And it would be in a facet to increase earnings per share, because GameStop makes $600 million a year in profit. I know there's going to be people to dispute me on that, but it's because they're not doing the math I'm doing. I've already done all the math for quarter 4, quarter 3, and quarter 1 of next year. But the trailing 12 come March of 2026 and June of 2026, GameStop's going to have $600 million, over $1, almost $1.25, $1.50 worth of profit per share. So even with an extended float or this dilution that's coming via bonds and warrants, it doesn't matter. GameStop's still doing $1 a share of profit. So if they bought back the shares, and there are currently 16% of GameStop's total float is short, 16% reported short. We are not including swaps. We're not including leverage out there that people are disguising. But you're dead on. You're right on the money when you're telling yourself that this market is overvalued and they're using the top of the market to be the collateral to GameStop short. Now, if you're paying attention, I'm not saying mo ass. I'm not giving you fairy tales. What I'm telling you is this. It is empirical evidence. You cannot deny it. It is absolutely present in front of you. We are at 2019 all over again. And in 2019, GameStop had more cash than their market cap. The market was going to go bankrupt and or correct itself. The world invented something called COVID. And the Fed print $6 trillion. They printed past tense. I can show you where the $6 trillion are. They're in NVIDIA, Apple, Google, Microsoft, Meta, Tesla. That's where they're at. That $6 trillion has found its way to the top of this market. Good. Because it's about to come avalanche right over here on GameStop. People won't believe it till it happens. GameStop's in position to buy up a lot of things at the bottom. $11 billion is going to be like $100 billion in the world of you need some money. How valuable is water in the desert? Bottled water in Sierra is worth more than a bottle of water in Washington State. Are you tracking? I pray you are. GameStop is walking around in that desert with a tanker full of water. And they're ready to sell it to people who need it. Wall Street needs it. They need GameStop. It's not the other way around. We are not in the S&P 500. Are you understanding this, millionaires? Let me tell you, when we are, the value is going to be beyond reality. I'm telling you. Because they created the value. They created the scarcity. And because they did that, there's going to be, till the end of time, well, GameStop's not worth 400 PE ratio. It might not be worth 400 PE ratio, but you're going to pay that. If you're paying that to offset it, you're going to pay that because you own it and you owe it. Remember what I'm telling you. I've been watching this for 5 years, and I've been telling the world this is how it's all played out and how it's happening. You came out with a letter in the past that proves my point. But connect the dots is the premise is they do it on purpose, not by the lack of they're not smart enough to do it or they squandered their opportunities. They did it on purpose because I talked to the damn lawyer. I talked to the bankruptcy lawyer. I talked to the CRO. They said, this is what we do. I didn't make up the stories, guys. Connect the Dots part 101. It's been an hour I've been talking, and I haven't read one message in the chat. I'm sorry for that. But I'm not. Because there's a lot to learn right now. Thanks, I've been watching as much as I can for the past few months anyway. If you guys have questions, I have answers. I'm going to open up the chat line right now. And I'm going to let you guys call into the show via Discord. If you want to come talk to me and you guys have questions about private equity, connect the dots, a theory, maybe theories on what's going to happen moving forward. I am going to talk about GameStop's earnings right now. And click on the link to join the show. There you go. So you can call me right now via this link. Morant's got a cough and is drinking Coke Zero. Yeah, hell yeah. Is it SP8 straight profitable earnings, or is they and then they can vote on it if they want to? No. Johnny crying, that is not it. The S&P 500 to get in, there's a couple things that have to happen. One, you have to have trading volume. You can't be a non-traded company. You have to have some legitimate volume, which we do. We have more than enough. You also have to have a market cap. The market cap has to be, currently I believe it's $24 billion. It used to be $13 billion 3 years ago. Let's see what we have here in the chat right now. I have a Korean guy.
Question.
Answer. What's going on, brother?
Hey, I'm actually asking for a lot of the Korean GME investor. There's a Korean YouTuber called Ucopy.
Oh, he's
He's
terrible.
been saying that GME will be hitting $17 before it goes any other,
Okay.
price jump because GME will buy out the BBBYQ, whatever whatsoever.
Yeah.
this guy has been pushing that for like almost a year now
Yeah.
in
Okay.
Korean community.
Okay.
Because he's the most likely doing all this translation. I'm actually gonna translate what you're gonna say and then what other people gonna say. What do you say to that?
Yeah.
To that,
First,
story that
let
he's
me tell
pushing.
you, I love Korean people. It's a great country. I lived in Korea for 2.5 years, and some of the best times of my life. I served in the military overseas, and I went to the World Cup 2002. So, 감사합니다, 아저씨.
Thank you.
Yeah, and I will tell you about you, Copy. I know him very well. I've had the not non privilege of interviewing him and being on his show. I went to his show and did an interview. I'm the one who told him that Bed Bath and Beyond was going bankrupt and that his TA was
Hmm.
wrong and it has been wrong.
Hmm.
I say, 아저씨야, 당신은 틀렸어요. I told him, I said, you wrong instead of you
Hmm.
copy.
Hmm.
His name should be U-Turn because he turns his ideas around and changes them. He's completely wrong about Bed Bath and Beyond. They came up with an idea that GameStop was going to buy Bed Bath and Beyond for whatever reason, and I came to the conclusion years ago, before Kai's Malej ever got into a PP show, before PP show ever even existed. I did an interview, and I told everyone Bed Bath and Beyond and GameStop will never merge, and that came from my leadership that I talked to at Costco. So I was talking to
Hmm.
leadership at Costco, and I went to them and I said, "Hey, I have an idea. I have a question." I said, "How does it work? Why don't companies merge and just form a big group of great companies and battle Amazon?" He says, "You'll never do it. You'll never win." And I was listening. I was like, "Okay, tell me why." He said, "Well, one, we're winning. When they lose, we win." So I was like, "Okay, I get it." So GameStop could just win by Bed Bath& Beyond losing. Okay, so did that stop the merger? He said, no. What that does is it tells you that only one group of leadership, only one leadership team is going to be in charge. You're not going to be able to take this identity that is GameStop and infect the culture of a neighboring company, like a merger and acquisition side. That's the hardest thing to do: merge cultures, merge leaderships. Who's at fault at this point? So when I started thinking this way, that's when I came to the conclusion that, hey, you know what? I know why it's not going to work from a leadership standpoint because I'm in those roles. So I went and I told everybody, and I said, it's not going to happen. And you copy said, no, 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 I read something or I talked to someone and he's been so wrong. His TA is completely wrong. He needs to start doing TA on log charts, not linear charts. So he does a lot of linear charts. And if you're going to give me linear price action and tell me what's going to do within the next month, then I better see you on a linear chart, not a log chart, and vice versa. If you're going to tell me what it's going to do in 5 years from now, I better see you on a log chart, not a linear chart. So the TA bros know what I'm talking about, and I've studied that part. So come on through and we can have that conversation. That company was destroyed. That company was destroyed from within, and I've shown all the ties to private equity and how they did it. And they, if you read the bankruptcy and you read the filings, they literally did a Chapter 7 liquidation, but they called it a Chapter 11 for fee purposes. So they liquidated that company, they carved out the assets, and they shipped them out to all the other companies that were waiting to carve up to eat up assets, like Burlington and some other companies, but or Container Store, Overstock, and everyone else that got a piece of it. It's not GameStop. You should never associate another retail company with GameStop. That if you do that, if you live that way, then you're doing it the right way. The second part, the minute you name UCopy, PP Seeds, or any other failed YouTuber that has pumped other positions in their lifetime, if anyone has ever pumped Tupperware, if anyone has ever pumped AMC and or Bed Bath & Beyond, they can get the fuck out of here because they are the reason why people lost money. They are the reason why people cannot invest for their future because they implement these ideas that you can make more money elsewhere and then come back to game. That's not the way this works. That's not how this works. So I will encourage you to tell all of my Korean brothers and sisters to study and to watch Connect the Dots and to watch this show, sure, But I'm standing on my own 10 toes and my own 2 feet to tell you, I encourage anyone to come out here and tell me where Connect the Dots has gotten it wrong and we didn't understand the leverage and the connection to the next investment. It's GameStop or nothing. And it's going to be that until the day I die. I promise.
Thank you so much.
Welcome.
Because I seen it on the expos. You copy always post this like pretty picture of the algo trading, and everybody's heavily like almost like a gamble,
Mhm.
like betting on his TA, and he never says, "Hey, I'm sorry, I'm wrong." He just go for it.
Has he ever shown you
I
his
have
position?
personally few of the members that contacting me through
Yeah.
social network saying that, "Hey, you copy basically guarantees me that it's gonna hit at that price that he went in really heavily and he lost a lot of money. Some of them almost lost a family because of that. I mean, it's his fault too, but way he communicates with the Korean community, he basically is calling it guarantees.
Yeah. Yeah. Well, think about this. What's lost in translation is you copies Canadian.
Yeah,
Okay.
true.
So I'm telling you, if you showed me a guy who posts from Korea and he's speaking Korean and he knows about our markets, let's have that conversation. But you're showing me a guy who's from Canada, and I'm going to tell you about Canada. You guys could all go do your homework on Anson Funds. Anson Funds, and there's Hindenburg Research. And the job that's happening right now, there's lawyers involved, there's crime involved, and what it all comes down to is Canada, they have different laws for social media, and all these Canadians are being paid to publish videos and content. Another guy, his name's oh god, what's his name? He changed his name, but it's his name's Cal something, but he's Financial Journey. He posted about Mullen Automotive for years, got exclusive interviews with David Mitchery, the CEO, and they robbed people blind. And all he can do is say, "Oh, I got that trade wrong. Let's talk about Lucid now." And it's the next investment. And they all show up on Tony De Niro's show. They all show up on other fin influencer channels. But I've already dealt with Canada myself. I had Canadian distributors threaten to end the relationship with Costco if I kept my show on air. Costco asked me to take down my show because they didn't want to lose those deals with Canadians. And let me tell you, there's a lot of pressure from my management team, letters, everything. And guess what I did? I kept my show alive. I had to restructure what I say and how I say it. I had to make different videos. I had to take down past videos. Those guys are all liars. TMI, Uncle Bruce is just he's a too big con man in my mind, just offering shit for money. But I will tell you that Canada they spring on so many YouTubers onto you, and after we found out that you can buy influencers and comments and views, and you would think you have that many people watching you, and that's how I know that they're not watching. But I will also tell you, he pulls about 400 to 500 people a show live. Live Korean investors, and that's all he's
That
doing.
is so sad.
That's all
Yeah,
he's doing.
that's
He's robbing his
extremely
own
so sad.
people. I'll never do it. And I just do me a favor, my brother here. I don't know your name. I can't read the Hangul, but what is your name?
Oh, you can call me option trader.
Options trader. Okay. Hey, do me a favor, options trader. Ask these guys to show you their positions and not their PP coins, their actual shares of the companies they own, and show me all your losses.
I'm actually so grateful that you just said that because most of the Korean community members, we did ask you copy either he actually own a share of a GameStop or not on during his life. And clearly he said it on his live. It's on the YouTube too. He doesn't have any share of GameStop. He
None of them
doesn't
do.
own any share of a GameStop.
None of them do.
Period.
I asked
He does
Jackie
not.
to show his position, and someone else asked him, and I think he bought
I mean,
500
he even
shares.
have UCAP even have a dedicate, you know, YouTube channel that's basically recording. I'm just gonna put it on the chat. You guys can check. That's a Korean retail investor who has been damaged from what he because of his TA. They made their own YouTube page to basically mocking him. And there is a Discord, Korean Discord members that actually they made a group to what to do with this guy because he basically guarantees it. And then they record it during our YouTube, like live. So I just wanted to say this is a time of very important time. Money is very hard on monies. And GME is verge of making something really crucial right now. So anyone that who has believe in holding a GameStop shares, do not be fooled by a snake like a U copy. That's what I just wanted to say. So I
Hey,
will tell Korean
thank you.
community about your channel too to make sure listen to the facts and detailed information that you're giving out. So I just wanted to thank you and what you do and everybody that who holds a GameStop. I really wish you guys to rock and roll. Okay.
Options trader, I really appreciate that. And we'll get that message out to everybody. My channel is open to all Koreans and to all people. But if you ever want to talk bad about UCopy, this is the spot to do it, I promise you. Now, here's my position. I'm showing it on the screen right now. I have $58,010 into GameStop. Current value is $55,000. I'm down 2,007. I'm down 4%. Am I sad? No. It's the lowest GameStop's been in over a year. So I think I'm going to be really good coming up. Certainly tomorrow. I think this market's going to do what it does, but I'm encouraged that there are people out there that are questioning the people giving the information. I'm encouraged by that. They won't show their positions and they won't have this conversation with you guys out loud, but like that young man just did, he's telling you what's to come. So I have more to talk about. I'll read the chat more. There's a lot going on. I'm going to pull up the TA so you guys can see the chart in real time. Now, I'm very sick, but I'm getting through it. I will get through it. I told you guys about this conditioning of this market. I don't know what's plugged into the algorithm, but the condition is gap down, complete destruction to the stock. To be up here at times 35.81, I know how everyone felt at that time because it was right before the annual shareholders meeting. Our earnings were phenomenal. So you saw our earnings come out. We have massive profits and we're making money. So for the next quarter, we ran up and to the right. And that's what happened this whole quarter. Earnings come out. We announce a bond offering, an additional bond offering. The first bond offering came down and we ran all the way past it. The second bond offering came down on earnings, complete gap down, and went sideways forever. Forever. Another quarter. We went a whole quarter sideways. You can imagine everyone telling you this stock's going to 19, this stock's going to 17, 15, whatever they want to tell you. That's not possible. And the reason I tell you it's not possible is because this is the reality of value right here where you're at 21, 22. That's value. Below that is what I call unbelievable, right? Detached from reality is what I've called it. This whole move down from all-time lows from $22 all the way down to $19.93, that was detached from reality. I've seen it happen before. The other times it happened was right here. We were at this level from quarter to quarter where we were just playing the part. We're in the cut, $13. But from 13, it went down all the way to $9.95, $3 drop, right? Sounds familiar? This is beyond reality, detached from reality. So as we felt down detached, boom, we hit a bottom and we curved out of it. We curved out of it. You guys see it right there. Look at this. Boom, boom, boom. Guess what this curve does? It catches the derivatives market, the options chain. It catches it at its lowest part, and it grabs those kids out there writing covered calls at 23, 22, 22.50. They all got caught with their pants down. I showed you 63,000 call contracts get called into the money. But because that gamma ramp goes up, you then have a little bit of a tick down, but then a rocket out of here because it's going to continue to grab the momentum of the stock. And you go another week of increases, we have real problems. Then we have roaring kitty memes that show up, right? Okay, cool. Well, remember, these 3 days, 4 days, give it away, okay? The curve out of the bottom. Let's go look at it. There's a curve out of the bottom. Boom, 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 boom. Does it have to gap fill tomorrow? Probably. Maybe we get 2 red days, but by Wednesday, I'll see you. I'll see you. Or it's just a straight gap and go, and we won't see you much longer. But what you're doing, okay, excuse me, you are conditioned because of this movement here, us, the ones who've been here for 5 years, we don't care. We don't care. When the stock was down here in the 15s and 16s and 17s and all this nonsense, we were in here. Did we buy as much as we could have? No. Did we take it for granted? No. We just probably we didn't have as much cash as we wanted. Or maybe it wasn't that payday. But as of lately, $22 is looking real good to some people. $19 sounds really good too. But what's the difference between the two? Not much. GameStop's up 13% in the last 5 trading days. Now, think about this. Your mind and your heart, the way it works is you bought in down here at the bottom, $9, $10. You were in here at the $15 price range, and you go, you know what? It runs, and when it ran all the way up here, I remember it hit $80 in the pre-market. Went all the way up here to 64. This is where people are going to brag and say, well, I took my profits and I ran. You got out of here because your heart is conditioned to think this is your rip. This is your rip. This is where you take profits, and look at us go back down. Ryan Cohen did the unthinkable. What did he do? He offered shares at the bottom. People didn't understand what that was. They're like, Marantz, you need to offer shares at the top. Get as much money as you can. What are we doing? Why are we offering down here? Why are we? He did $400 million raise on one of them. You sold 20 million shares. He raised $400 million. Doesn't care. When you're selling it at the bottom of the run up, you are buying the insulation. You are buying the layer. I've always told you that hockey stick mentality. You got the hockey stick and it's thick, 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 and then there goes the growth. That's the up and to the right. It's gone. But we have to build that base. And right now, here with GameStop, Ryan's selling at the $20 level, then picking it back up, selling at the $30 level. At the peak of what this is, you have all those shares sold off to the public. So when it goes below reality, now you tell yourself, okay, 19 and 20. Man, you know what? It goes up to 40. I got to take profit, right? Tony De Niro, isn't that what you said? No way. No way would I take profit. This thing ran up and it gets me the other half of this cup. Think about this. This stock goes up 3x. And it goes and touches the other end of this cup. I'll draw it for you. It goes from here and it goes up here. Right now. Right now. With new earnings report comes out, numbers are massive. We have a year round, we have a month, a whole quarter of power packs, have all the execution of Pokemon cards, all of it. And then you got Christmas coming. I'm telling you right now, GameStop put their best foot forward because they got 24,000 cards online and they're selling power packs and golden tickets and they're doing everything amazing. Execution, right? Good. GameStop goes up and goes touch 60. What do people do? They're conditioned to do what? be excited and sell because the movement of the last year and a half has killed their spirit. Yeah, that's what happened here. These 3 years of going down and to the right to rebound and then to sell off because, yeah, man, that's it. I took my profit. I'm out. You think so? What people haven't told you is that the increase of GameStop's float via the bonds. Okay? I'm going to do this for you. I'm going to do this math over here on my own. Oh, it's my dad. Hold on. I'm coming tonight. My dad was texting. I didn't know I had my phone on mute. My son's texting me too. Oh, let me tell my son something. No, son, you're playing on a free trial. When you actually can get all the way up to level 80, you can hold infinite amount of gold. But you gotta get off that free trial. Good luck to you. He's playing WoW. He's asking me for WoW tips. There you go. Okay, he's on like some free trial up to level 20. So I won't give my son tips on WoW because I think WoW's a waste of your time and it's gonna ruin your life. But the game's amazing. But he's Horde anyway. I don't talk to Horde. I'm good. Anyway, so this can happen to you where you run up, but with GameStop, I was going to do that. I got distracted. Sorry. My people distract me. So right now we're at 448 million shares. I'm ballparking the number because we're so close to it. We'll times that by, or we won't even do that. We'll do this. We'll take 24. Oh, I want to get the right number. Let me go over here really quick. I'm going to get something correct for you. I don't like to ballpark things. I'm going to get it correct. S&P 500 requirements. I want to look at this really quick. It's telling me, see, that one's wrong. 15.8 billion. That's not it. I know it's not 15.8 billion. I know it's more than that. 22.7. So 22.7 billion. Got it. That's the current market cap requirement. 22.7 billion. Now you divide that by 448 million shares. That means we need a $50.66 per share. They keep increasing the requirements. Oh my God. These guys will not stop. They've increased this how many times? At what point are they going to lower it? Never? We're just going to keep going up? $50 and some change. Cool. Now, here's what I want you to do. That's the level. I'm gonna actually type it in this way. I'm gonna give you horizontal. And I'm gonna go ahead and put it in here about right there. It doesn't matter where I put it because I'm gonna change it. And I'm gonna put $50.67. Boom, done. So that is what GameStop needs. This purple line up here, we're going to change the color. It's the golden standard right there. We're going to make it big. Boom. So GameStop needs that level to get into the S&P 500, right? The first thing they need to do, they need the market cap. Then, of course, they got to get voted in and all that, but let's get the market cap, right? So that's where they're at today. Now, and when you take into consideration that they have offered, it is going to be 4 point. Oh, man. I know how to get there. Hold on. I know what to do. Dilution tracker. Boom. This website's awesome called Dilution Tracker. Is somebody here? Did I just hear somebody? No one's here. Cool. Okay, got you. I'll be listening. GameStop. Let me see what it says. Dumb. Jimmy. Got it. Let's see what we have here. So let me show you what I'm looking at so you guys know what we're doing. So you come here, dilution tracker, GameStop, 447,910,000. So they're really close to 48 million. That's why I did it. Okay. Their cash, boom, ton of cash, almost $9 billion, 8.9 it says, which is cool. His operating cash flow. Okay, here we go. So warrants issued. That stands for 59 million shares. I think they're going to get there. 963. Got that. They have these bonds. One is going to be for 49 million shares. 191. And the last one is going to be for 92 million. 2673. 815. Plus their actual float, which is going to be 44791, and I'll just round it off to the nearest number there for them. Boom. So total 649, 375, 969. Got it. So write that down, somebody. 649, 375. 376. I'll just do 376. So you're going to go ahead and take the 22 point. Did I call it what did I call it? 22. I want to make sure. 22.7. Got it. So you're going to take $22.7 billion. You're going to divide that by the 649. And what was the rest of the number? 796, 767. Ah, man. I hate that. No, I got the history right here. My bad. Oh, 376. Got it. Boom. Look at this. I love this damn thing. My phone's amazing, bro. So, what does that mean? $34.95. $34.95. So, if GameStop, with all their dilution, with everything you see, if they can get their stock price to $34.96, I'll just ballpark it like this. That is the requirement for the S&P 500 right there. Is that attainable? You're damn right it is. Because here's how you get there. You get to 32, you convert. Now you have all those shares. Your float increases. As your float increases, you get all those warrants that get into the money. They convert as well too. So no matter how you cut this up, I don't care how many times you want to cut this pie, 7 years from today, GameStop's in the S&P 500 at some type of level. No matter what. No matter what. Because I'm telling you how much cash they have. You add that to all of the profits they're going to make. I'm going to see you 5 years from now, and we're going to look at each other and go, holy shit, look where we got. Because once you see 675, 650 million shares, whatever it may be, doesn't matter. GameStop has so many shares available to them to sell at any price point that everyone gets to keep coming over and they keep getting the cash. We can leverage the next 300 million shares at $30 a piece. Because apparently we sell them at $30. What would that give you at GameStop? $9 billion more dollars. On top of the $11 billion they already have cash. You would have $20 billion cash. Now what do we do? What's GameStop worth? What's their company worth now? Oh, it's not deployed, Marantz. It wouldn't matter. What's the interest worth on that? That's $200 million a quarter. $800 million a year. Almost $1 billion in interest. You go and tell me where you want to play. What investment are you looking for a lifetime? Because I'm here with it. All right, so now that we did all that math, simple math real quick, 34 is what I'm looking for. Remember, if I can get $35 a share, I know I'm S&P ready. I know I'm ready. I'm not very good at math. Sorry, guys. It's just, you know, how it goes. I've been watching Connecticut dots. Thanks, bro. Appreciate that. I'm trying to get this cough under me, but it's tough. Man, Jeremy is so annoying. That dude sounds like he's still going through puberty. Damn, I can't stand him. Oh, yeah, bro. Oh, there's another fake. Don't show me the position you just bought in right now. Don't do that, man. I've been buying it for 5 years. If you have too, then show the position. Go for it. We'll catch up in a little bit. GameStop buying up everything for my son's birthday. Good job, Carter. What a good guy. Okay, now let's talk about this movement that I want for GameStop. Okay, I think GameStop's going to go up. Right, the end of this triangle here. We're at the pennant. We've had this track record. We've had this level of support for a while. We found it. We're going. As we break out, remember, you want to stay above the golden road. That is the S&P 500 over time. We will get there. I'm telling you we'll get there because you're going to convert those bonds. You're going to do everything. Everything's in hiding. You know, all these guys talk about, well, they're not going to, what did Tony De Niro say? Nobody ever converts early. I'm just like, Tony, your own investment of AMC, they converted early. Silver Lake went in there and converted within 2 years of issuing the bonds. People do convert early. So will it happen for GameStop? I don't know. I do know this. That's the bottom. $19. Everybody, oh, it's called 19. Good for you. 1993. Is that what you called? What does that matter? Wouldn't matter what you called. It's, do you agree that's the bottom? I think we all agree at this right now. So we're going up from here. Because earnings are coming. What do you think they're going to be? I'm just asking for a friend. I know what they're going to be. But we're going to go test this 120. We're going to go test this 120 level way up here. And when you go hit this 120 level, this purple line, think about it. People are conditioned to sell. They're conditioned to sell because of this string out on this stock. And I'm going to tell you guys something about condition. People are going to go see this 35 as a resistance level. We're going to sell right here and we'll buy back in and whatever. No, you're not listening. You're going to pay a lot of taxes for the mistakes you make. But I'm not giving financial advice. I'm telling you what I'm doing. That right there, my condition is I'm numb to price action, right? Some people are not. Some people want the profit. Some people bought in for the first time last week. They're going to go, I want to double my money. I want to get up here and sell. Good. That's your condition. But you're not educated. Because the educated ones understand that this golden road is the S&P 500. The requirements. I want to lock this so it doesn't move. Boom. I want to lock this so it doesn't move. I lock all these so they don't move. There we go. So that's the requirement you need after dilution. I want people to know these things. Because for me, when I see $35, I get it. I'm going to see a healthy number in my bank account. My brokerage is going to show me that I have, goodness gracious, I don't even know. What would it be? It would be like $12,000, $80-something thousand in there. $80,000. A lot of money. I'm sorry that some of you guys are rich and some of you guys don't care about 80 grand. I do. That's a lot of people's salary for a year. But you would be amazed how your life would be pressure-free with $80,000 in your pocket. Would you pay off all your debt? Would you try to get free and clear? Or would you create more problems for yourself? These are the things that people do. For me, I'm going to sit on the total and I'm going to look at GameStop and say, what's next? Because I know the S&P 500 is a reality. I also know that GameStop, they're doing things as a company where, like Michael Burry just told you, they're not taking advantage of those opportunities in front of them, but they are today. Remember, Amazon, there is no leader at Amazon. There's no leader. Jeff Bezos is gone. He's going on to other things, and you're winning because of your reputation, because of your marketing, your branding, because of the history and the culture of what you are. That's why you're winning. But I'll tell you, over time, that's fleeting. You break down. Even Disney doesn't have the identity that they used to have. You don't have the command, certainly if you don't really care. In this case, Ryan Cohen and GameStop, they are the culture. They have changed the culture. Think about how many families shop there now and how much their profits are there in all. Like, if you think about the view of it all, they did $978 million, $972 million. I forget the number exactly in sales. So that's the revenue. Yet they closed 1,000 stores. So they had an increase of 20% in sales and closed 1,000 stores from the previous year. How in the hell do you have an increase in revenue? And yet Wall Street and these CFAs and these wannabe dudes all over the internet tell me I didn't know what I was looking at when I'm telling you, yeah, they have lower revenue, but there's more revenue per store. Because I would go divide it by the stores and be like, nah, they're making more money per store and or more money per man hour, more dollars, period. More dollars per square foot as well. So I think the business is going to show you that it might have curved out its own bottom, and that's called a turnaround. They're now pivoting, and they're turning around to go in the opposite direction. So you will see the growth in categories, SKUs, revenue, profit, margins. Margins go up because you get to annualize on the program itself. And what is everybody accustomed to, and or what were they trained to do, right? You're conditioned to do when it comes to GameStop or anything you do in life. What are you accustomed to doing? Your cable company calls you and says, hey, we're going to raise the price of your internet by $5. Are you going to say no? Are you going to quit? Are you going to go somewhere else? Probably. Especially if you had a good deal. You know what's the best part about this, about what GameStop did on their membership side? And I don't know if you guys know the 80-20 rule, okay? I don't know if you guys know it, but you should know it. And we're going to find out if we can teach you some stuff. Where's my Kindle? Some of you guys who own businesses should know this rule. Some of you guys that are in commission-only sales, you guys should know this rule. And everyone should know this if you're ever going to be running something in your life, okay? And I've got a handy-dandy, let me see right here. So it'll be right here. So I got this for you, okay? So it's called the 80-20 rule. 80-20 rule. So I'm going to take 80% of people that actually pay the right price for things, the correct price. It could be a membership. In this case, pro membership. And you know what they were paying? Everyone was paying $15. $15. Some people grandfathered in at the 5 and the 5 and the 5. Right? So people paying 15, people grandfathered in at $5, whatever. And you know what happens? You go, you know what we're gonna do? We're gonna make it 25. And people are gonna go to you, and they're gonna go into your meeting, and they're gonna be like, "There's no way, bro. There's no way you're gonna go ahead." Oh, I'm so sorry, I changed the page. There's no way you're gonna get $25 out of these guys at the bottom. They go, "There's no way you get $25 out of these guys. That's too much of an increase. You might get some here, but you're gonna get pushback." And you go, "Okay, cool. So I'm gonna lose the guys at the bottom. I want to lose them anyway. They don't pay enough anyway. They're not in it for the right reasons anyway. What I'm going to do is I'm going to get the bulk of people to convert over because I'm going to give them more value and I'm going to explain and educate. And then the ones at the bottom that I lost, I actually make it up by everyone that I converted up here." That's how it happens. This has always happened. And I'm going to tell you something about these bottom guys. These bottom guys are actually going to come up and pick up into this level. We don't lose anybody. The ones that we do lose, we wanted to lose because they don't pay enough anyway. So when GameStop goes out there and says, "Here's my membership deal, it's $25, and everybody says, "Man, I ain't doing that, man. I'm out of here." Good. We didn't want you anyway. You know what we get? We get the guy who understands $25 is the value, and the more you spend, I'm going to get I'm going to condition a new shopper that's going to come every month and get their $5 back. I want that person. I don't want the one who's been doing it his way. You're going to do it our way. But these are the things that GameStop's doing as a company, as a unit, and no one else is doing. Now, you're a pro member, aren't we all? Because I posted what's going to happen. Cool. It says, Marantz, no one is talking about the new Texas Stock Exchange opening for trading in a few months. What are your thoughts of GameStop listing on the new exchange and how it opened the door to new GME price? Dustin Cross, I don't care about a new exchange. If that were to happen, it wouldn't matter to me. It doesn't affect the way I look at my investment. I don't look at my investment based off of dark pulls and insider trading and backdoor deals. I don't work that way. I don't care. If you've ever watched this show for the X amount of years that I've been doing it, I don't care about market mechanics. All I care about is the fundamentals of the company. How are we running a retail business? That's what I care about. If I focused on market manipulation and or the plumbing of markets, that's for people who want to capitalize on opportunities. And the price action of GameStop doesn't even bother me. GameStop could stay at $20 for the next 2 years. I wouldn't say shit, but thank you, and thank you for letting me buy more. Some of you can't handle that. Some of you guys need it now, or some of you guys are like, no way, I can't keep doing this. Okay, well then cry about it some more. Because maybe you haven't hit your head on the concrete enough. You know, when I got a pen. And I want to break this. Okay? I want to break this aluminum can. How many times do I got to hit it before it breaks? I might have to hit it 1 billion times. You're never going to know how many times it took to break it. All you're going to know is that I broke it. It's a mentality. It's the champion mentality. It's this idea that I have all of these failures. I failed at this opportunity. I failed at this example. I failed at the NFT marketplace. I failed to execute on the mountain full of failures. I've told you this is the one accomplishment. So I don't care what trades and what doesn't. I care about the company as a functioning unit. I want it to execute at the highest level. I really do. And if it does, then the stock market will inherently correct itself. I don't have to go make it happen. You don't think that this market's crumbling? I saw a Chicago Miracle Exchange get halted in the pre-market. Completely halted on Friday. With no explanation other than the servers were overheating in Chicago. How's that even possible? I've never heard anything like this. Somebody has to show me that it's happened before, and then we'll have that conversation. What do you think GameStop should do? I want to see your thoughts versus Barry's. I think GameStop is doing what it should do. I think they're doing my baking theory. That's what I think they're doing right now. Had this one year, we were baking pumpkin pies. And if you guys don't know about Costco does an overnight shift during Thanksgiving week and the week before to ramp up for baking pumpkin pies and apple pies and pecan pies. There's only so many ovens, only so many racks, and you're on a timeline. I got to make X amount of pies. And then you make them a week before and you put them in the freezers. We actually rent a reefer truck and we put thousands of pies with dates on them. And these are the oldest ones. These are the newest ones. And so you put them to the floor based off of the date that you baked them, right? In sequential order. Well, this one year we had this stupid manager. God, he was the worst. He was my AGM and he had a shift in the bakery. His name was Rocky. I'll say his name out loud. I don't care. Rocky Roque goes in there and he forgot to add water to the pumpkin pies. He baked all night. Every time he baked the pies for the whole day, this is the day before Thanksgiving, he forgot to add water. And so the consistency of the pie was gross. People that bought them returned them within minutes. I was like, this is gross. And so we figured it out. We're like, whoa, wait a minute. Boom. So we had to pull all the pies off the shelf. We lost thousands of dollars that day. But it's not the dollars you lose based off of the one item, okay? It's a $6 product that we don't care. So you didn't bake, 5,000 or 2,000. I don't want to over exaggerate. Maybe it was like 2,000 pies we had to throw away. So what'd you lose? 12 grand? Doesn't matter. That's nothing. Nothing when you're selling $1 million a day every damn day for the whole holiday, right? So, but you lost the destination item. So somebody that went there for that product didn't get it. They have to go elsewhere. Now you're really losing dollars. Okay. So there's a whole reason why I'm telling you this. It's going to all make sense right now. So the next year, I'm part of planning. I'm a part of budget, P&Ls. And I'm going, okay, bakery. Remember, I'm the manager of it all. So I said, what are you going to do? And they had no idea because they didn't have a number to reference for last year's sales. The number was so small, they were like, oh, I only have to bake this many because this is all I have. They didn't know what to do. So this one manager comes in and he goes, I got it. We don't know how many to make because we messed up last year. And I go, yeah, okay. So what are we going to do? He goes, I got this. We're just going to bake them all. So when you bake them all, and you didn't make enough pecan, you didn't make enough apple, and all you made was pumpkin pie this time around, I think we had left over after Thanksgiving and that were going to expire because remember, we have a day off for the holiday. So you lose a baking day, you actually lose a sell date, then you got to have another day. So you can't sell this many in this time frame because no one's going to come in the day after Thanksgiving on Black Friday and buy all these pumpkin pies that you have sitting there, and you don't have the space for them in the refrigerator. You don't have any. I mean, it's crazy the way you have to do it. So you got to donate them to the mission. Donate them for Thanksgiving. Do all of this. I think we donated 3,000 pies. We were off. That's all profit. That's all gone off of profit. We lost $18,000 in that day. Take away all the profit, bro. You lost it. It's a penny business. What the hell? We lost. You know why we lost? Because we didn't have anything to reference it off of. There's a what we call an RR. It's a response rate in marketing. That's what we call it, an RR. Some of you guys will call it like click-through ratios, like online and whatever. But RR is response rate via a TV ad, a radio ad, whatever. But what's our response rate for baking something and selling it, right? What do we end up doing? And we were like, nah, man, get the hell out of here with that. You didn't know the name. You didn't know the number that you did last year. We couldn't tell. We didn't know. So when you're managing a company with small margins, like GameStop has limited resources. All right. I know you guys think they have a lot of cash. They don't have a lot of cash because they can't show a loss of any kind. They're not allowed to. They're having to create profit with minimal resources because that shows you that you're a better business. This is when Ryan Cohen wrote the letter and said, guys, paper clips and pens, right? I mean, we got to step over this shit to make pennies. Like, this is it. And I started thinking, I'm like, man, look at these guys operating with minimal inventory. You got to execute. They won't even pre-order things. They literally only buy whoever pre-orders. They won't buy extra. And I'm like, I get it, because you have to guarantee the sale of your inventory. You can't sit there and saturate the floor. Can't go over-skewed, over-stored. You can't do these things. You got to execute. Until you have it, until you understand it. So over time, they had something to annualize off of. Unlike the bakery story where the kid had nothing to analyze off of, he just went and made whatever, we ended up losing. Now, the next year you dial it back and whatever it may be. But think about what Ryan's been doing. Been releasing Power Packs slowly, been doing launches slowly. Like, hey, we're going to do this program. We're going to try this marketing scheme. We're going to do this. He's executing. But this is the first time after February of this year and again in June, maybe May, maybe it was May. When was AJ's birthday? When did I go to the beach? Anybody remember? I can't remember the date, but I know I bought a power pack for him. I gave him a power pack, a physical power pack. And I had bought one previously when I did a show at the mall where I was doing giveaway. Here's why I tell you this. Because GameStop filled up their website with initially it was 4,000 cards. They sold them off via physical power packs. Then they filled up the website, got all the way to 9,000 cards. And they sold it all off via physical power packs. Now they went all the way to 24,000 cards. So it's like they ramped up. Now we're going to go for it. Because whatever you don't sell, you can put them in power packs and send them out, and you're going to sell them anyway. So as you're churning through this inventory, that's cool. We got a number now. But you want to have a catalog for people to look at and go get for Christmas. That's what we're doing right now. And we're going to go ahead and ship them right back to physical. This is a phenomenal thing for retail. Everything I see GameStop do from a retail standpoint, I appreciate, because I realize that they're the best at what they do. They are executing at the highest level in retail. And I've noticed, it's one of these things in my brain where I study it. Like I used to be in advertising, so now like when I look at things, I look at a magazine, I look at it from an advertising standpoint. Ooh, they got the inside cover, glossy, color. They got a quarter page, black and white. Like I look like that. That's how my mind works, right? So I know a lot about advertising. So then I go to retail, and I know a lot about retail. So when I go see somebody performing in retail, I go, oh man, look what they're doing. That's different. That's new. That's execution. Willy Wonka, golden tickets. Like they are so in tune with their shopper and the experience for the shopper, and they can do it. It's not like, and they're a corporation, and it's not like Costco, Best Buy, Walmart, where they have to, when they test something, they got to figure out how they're going to train everyone to do this. And there can't be too many changes because they're so massive and they're not in tune with their shopper. They can't do those things. They're not this retail company. GameStop is a ninja in this market. They are so different. They do things that other retail companies wish they could do. And Ryan is the executioner and not executioner like killing something. He executes it. And here's why. Because when you have this opportunity in front of you, I don't have to go, okay, hold that thought. We're going to have a meeting about that 2 weeks from now, next month, when I'm back on my ski vacation, when I'm back from Vail Resorts, when I'm coming back from vacation, whatever time I took off. No, these guys are in the damn box. They're working. They loved it. They do it for the love of it. They're not paid at all. The work itself is in just the idea of execution. That is GameStop. That's why it's so fucking amazing. I got a CEO. I got board of directors that are doing things out of the kindness of creativity, of love, of future, of business. That's not because you're a CEO and you got paid and now you have what? Well, I got penciled in 3 weeks paid, 5 weeks paid, 8 weeks paid. I get these bonuses because, hey, look at the numbers. No, they're in the box. And they're tweeting and they're doing it. They're doing interviews and they're hiring now. Expansion, move. That's gotta motivate you, inspire you. I don't want to use motivate anymore. I want to use inspire. Ryan Cohen is the best in the world, man. And imagine being invested with the best in the world that does it because they want to do something new. They want to move the meter. They want to be a difference maker. They want to solve a problem. And then people have the audacity to call it just a retail company. Oh, you're in competition with them. They have no competition but themselves. The PR is them. The barometer is them. The temperature is them. They are everything. And then you have investors like me and you that actually pay attention to the company, and we don't take that for granted. Can you imagine how many uneducated investors are out there that see things that GameStop does and just goes, great. Now, why does the stock price move? And when it does move, I'm selling, I'm getting out of here. You moron? Are you kidding? You're going to move out of here when who's doing what? Who? We're the only ones. We made power packs. We have this great program for everyone to be involved. I've been I've been the biggest supporter of GameStop on the internet, on my feet, in my life. I've been doing it for so long when no one was listening, when they weren't executing. And you know, like when you tell yourself, I'm going to buy this lottery ticket and I'm going to win. You tell yourself that every time you buy a lottery ticket. And you walk out of there with a different skip in your step and you say, oh man, what I'm going to do with that $754 million I'm about to win. Oh man, I'm going to change the world. I'm going to do that. Guys, I'm telling you, that's how I am about GameStop. I'm that way. I'm that way because I know that when it happens for us, it happens for all of us. We're going to be able to reflect back on the journey and go, man, we were those guys. I don't know if any of you have ever wanted to be a part of something where you knew you were going to win. Like I tell my wife this every time. I come home and I go, hey, I'm going to get that job. She goes, how do you know? Yeah, it's just a feeling. I'm going to get that promotion. It's going to happen. It's like that intuition. It's God, right? It's in you. I don't think there's an AMC investor, Bed Bath & Beyond investor, any investor of any other company that feels the way we do. I don't think they believe the words they say. I think they know when they're wrong and they still say it anyway. Just for the sake of saying it. But I'm living GameStop with you guys. And you are absolutely going to win. And you get to tell people the story. You get to show them how you did it, why you did it. Does it start tomorrow? It could. But what I'm telling you tonight, and what I want to tell everybody, Ryan, Dr. Michael Burry, Keith Gill, everybody, just because stocks move up and down, there's still a story behind it. So when you see a stock go to the moon, realize there's still things that are going to be happening with this company and this investment that you get to buy more. And I'm living proof. I don't know how God put me here. I don't know how it happened that I was able to make more money in my life like I am right now and still be able to extract value from my investment that I couldn't get previously. But that's a lot to me. And I'm going to keep moving the meters and I'm going to keep doing what's right for my family and myself, all while educating myself on the greatest investment known to man. It is GameStop, guys. And Ryan Cohen is doing God's work. I pray for it. I envision it. And I built it. Now, I didn't build it by myself. But this community is stronger than anything anyone can imagine. You have that intestinal fortitude. You do. After 5 years, you still have it. Let's watch God work. GameStop. Can't stop, won't stop, GameStop. I love you, millionaires. I'll see you tomorrow. Peace.